Hang on, is Wayne doing it too, this part?
That's
Wayne,
what I
I
was
think we're
just
ready
gonna
to
say.
do the, yeah.
YouTube, we're ready, Wayne?
Okay, you're up.
Thank you. Good evening. Welcome to Roseville Area Schools Annual Truth and Taxation Hearing. This is a public hearing that takes place every December. My name is Sherry Thompson, and I am the Director of Business Services for the school district. So Minnesota state law does require that each local government hold a public meeting between November 25th and December 28th. It needs to be at 6 p.m. or later. It can be part of a regular scheduled meeting. We must allow time for public comments. And this evening, later in the regular business meeting, the board will be adopting the final levy. Presentation must include a discussion of the current year budget and the proposed property tax levy for the next calendar year. So here's our agenda for the evening. We're going to talk a little bit on, I'm going to give you some background information on school funding, talk a little bit about the district's current year budget. We'll talk some about the proposed tax levy for taxes that will be paid in the next calendar year. And then we'll take some time for public comments. Due to the ongoing pandemic, this is something that we typically hold in person. And if you are viewing this electronically, at any time during this presentation, you can send an email to finance@isd623.org. And it will be noted we will provide you the ability to provide public comment at the end of my presentation or ask any questions. Again, that's finance@isd623.org. Thank you. So the Minnesota legislature must set the funding for public schools. That's part of the Minnesota Constitution, that there needs to be a public school system, and the legislature needs to make such provisions by taxation or otherwise to fund the schools. As a result of this, funding is very highly regulated. The state sets the formulas to determine which revenue. Most of our revenue is based on pupil unit amount, and the state also sets tax policy for local districts, determining how much will be come in the form of state aid and how much in the form of property taxes. The state also sets the maximum authorized property tax levy. So we can't levy more than what is authorized by state statute unless it's approved by our voters. Those are the two methods of funding that we have. The state also authorizes the school board to submit referendums for both operating and capital needs. They must go to the voters for approval. So one of the challenges that we have with the state setting the basic general education formula is it hasn't been able to keep up with inflation. Since 2002, 2003, the state general education revenue formula has not kept up with that inflation. For the current school year, the legislature did authorize an increase of 2% or $129 per pupil unit over the previous year. No additional changes were made to the formula that have been approved by the legislature. So just so you know, when I talk about a per pupil amount for the year 2021, that is $6,567 per pupil. And it would need to increase by another $503 to keep pace with inflation. And this graph here shows just that. This is the inflationary rate. You'll see with the blue line. That's adjusted for inflation or the consumer price index. And this is the amount, the dotted orange line is where we are at and where we have been since 2000, 2003, or 2002, 2003. Another challenge that the district and all districts, this isn't unique to Roseville, one of the other challenges that we face is the funding of special education. MDE's records indicate that the cost of providing special ed programs, looking at on a statewide basis, was underfunded by $822 million. So overall, it's underfunded, the cost versus what our reimbursement is, by about 40% in each of our districts. That translates into a statewide average funding shortfall of about $5,700 for each of our special ed students. The underfunding of those costs requires then us to take dollars out of the regular instructional program to provide the support that we need in the underfunded programs. These are programs that are mandated by state and federal law. And it also, we want to provide the services that all of our students need, but it does present a financial challenge for us. So the primary options to bridge that special education funding gap is cutting regular budget programs. A lot of times we need to balance that or increase referendum revenue. And most districts, as is the case in Roseville, have done both. So what's happened as a result of this, and again, this is both Roseville and statewide. In 1992-93, 65% of the districts throughout the state had an operating referendum, and that averaged $332 per pupil. When we look at the current year, all Minnesota school districts have a referendum revenue and or local option revenue levy authority. This is something that was set up and authorized by the legislature back in 2013. The average is $1,570 per pupil. Of this amount, $846 is a voter-approved operating referendum, and $724 is local option revenue. Statewide referendum revenue, including local option revenue, provides 14.3% of general fund operating revenue. Roseville's referendum revenue for the same period is $1,777 per pupil. And again, this is looking at the statewide amount. And really what it's demonstrated to us, back in the mid-90s, the referendum revenue really provided bells and whistles for districts, and that is no longer the case. We rely on these funds just to provide basic services. Also, when we look at our levy, because much of it is just formula driven, if this district has a change in its tax levy, whether that goes up or down, it does not determine that necessarily that there's a change in budget. There are different factors. As I've referenced, our tax levy is based on many state determined formulas, plus the voter approved referendums. So we don't necessarily get to develop our expenditures and determine how much money we need. It's all based on state formulas or that additional approval. Sometimes increases in tax levies are revenue neutral. For instance, there may be a reduction in state aid, and more of those funds need to come from the local tax dollars. Our expenditure budget is limited by state set revenue formulas, as I've indicated, voter approved levies, and then our fund balance. An increase in school taxes does not always correlate to an equal increase in the school district's budget. Also, school districts, as one of the three most common local governments, our levy cycle differs from city and county levies. Cities and counties right now are going through the same type of tax hearings and looking at their budgets that we are. We began this work last summer. And for cities and counties, their budget year is the same as the calendar year. So they're levying for budgets that will run January 1st of 2021 through December 31st. So that those taxes provide revenue for the next calendar year. The school district's the budget year begins on July 1st, and it coincides with our school year. So we began the work last summer, and we're estimating enrollment. We're estimating other enrollment or other costs. We're doing that based on the 21-22 school year. So we're estimating over a year early for what we think our enrollment will be. So the budget, the taxes are levied. The levy will be authorized tonight. The taxes will be collected in the 2021 calendar year. However, it will fund the 2021-2022 school year. Then I'm going to switch gears a little bit and talk a little bit about our budgets. So we have several funds in the school district, and these funds are established by law. Our biggest fund is our general fund. It covers the majority of our day-to-day operating expenses, teaching and learning, administrative costs, transportation costs. Our food service fund, much of that is fee-based. We do receive some state and federal aid there. So that's the cost of providing meals to our students. Community service is for the majority fee-based as well. So this provides programming from preschool age through senior citizens. Our adult basic education, out-of-school time childcare, any kind of youth enrichment programs are included in community service. Our building construction fund, that is a fund that is dedicated, just as it says, to major building improvements or construction of new facilities. Our debt service fund, we do incur debt. Typically that debt has been incurred for building construction. The district was fortunate enough back in November of 2017 to receive approval from the taxpayers for $144 million building bond referendum. And so those dollars are flowing through construction, but then we did incur debt that will be paid off over the next 20 years. And that debt flows through the debt service fund. Our internal service fund, that's basically, we have a self-insured dental plan, employee dental plan here in the district. So that's what we see in our internal service fund is just the financing of the dental plan. We do also have some other post-employment benefit accounts. We have a OPEB is what it's referred to, irrevocable trust. Those are dollars that we have invested to cover the cost of post-employment benefits for some of our staff who have retired, who qualified for severance or medical insurance. Back in 2009, I believe, is when bonds were sold for that to cover those costs. And so there's a separate debt service fund to fund that trust account. Then looking a little bit at our revenues and expenditures, I won't go through each one of these, but this is a breakout. This is based on our beginning year fund balance for June 30th of 2020. So again, actual fund balances for the current fiscal year. These are audited fund balances here. Again, the majority of our funds are in the general fund. So these are our reserves. And then as we move to the right, you will see the actual, oops, I apologize. This is where we began July 1 of 2020, here's our actual revenues and expenditures for the year that we just completed, and this is audited. And then June 30th of 2020, our actual fund balances. And then moving to the right, these are totals of the revenues and expenditures that have been budgeted for the current year. So we are projecting our fund balances to be at the end of June 30th of 2021. Looking then at our total revenue, again, this is all funds. As I mentioned, the general fund is really the largest portion of the various operating funds or the various funds. So 76% of our revenues flow through the general fund. About 3.5% flow through our nutrition services. 5.6% or about 7.8 million is in community services. Building construction, we're looking at about $7 million there for the current year. And then our debt service, again, this is paying off the debt that we have incurred for the building improvements. And then our OPEB trust is about $995,000 a year. And those numbers are decreasing over time. And then we have some debt related to that. Then looking at our general fund, again, about 76% of our general fund expenses are funded by the state. About 20% are funded with local property tax dollars. And then we get just under 4% from the federal government, and we're under 1% for miscellaneous donations, fees, etc. Gifts. Again, the local funds other than property taxes is under 1%. So looking at an overall budget of just under $107 million in revenues for the current year. Moving then to looking at our expenditures, where do we spend that money on the general fund? Well, about 82% of our expenses are in salaries and benefits. You'll see we're at about 58% in salaries and 23.6% in benefits. We are definitely in the people business, and that's where the majority of our costs are incurred. In addition to that, we spend about $14 million on purchase services. When I talk about purchase services, I'm talking about even tuition that we need to pay to other school districts or cooperatives. This also includes the cost of our transportation to and from school for our students. This includes the cost that we pay for our substitute teachers. Those are handled through a contracted service. So that's about 13% of our budget. Supplies and materials is about $3.8 million or about 3.5%. Capital expenditures includes textbooks and curriculum. The majority of our capital is spent on technology for both our staff and our students, and that's about 1.5% of the budget. And then as far as debt service, that's actually it's debt service, but it also it's some of the borrowing costs and other costs related, and then also some insurance costs are included in that. So looking at, if we look at it by programs, regular instruction, about 41% goes to regular instruction, regular K through 12 instruction. Vocational education instruction is about 2% or about $2.1 million. We spend just under 21% of our general fund covers the cost of providing special education instruction. $10.1 million or about 9.5% goes into instructional support. Instructional support includes things like professional development, the cost of our media centers, curriculum development. So it's the just as it says, those functions that support that support instruction. Then we look at pupil support. Pupil support, this includes nursing services, guidance counselors, again, our transportation costs. That's all what is included in pupil services or pupil support. And again, that's about $10.5 million. Our sites and buildings, and again, this is our general fund, so this doesn't include construction costs. This is the cost of covering our utilities. Our buildings and grounds, custodial costs, any of those things that that support the facilities that we operate. And then the other is about $320,000. And again, this includes some of the property and liability insurance. Our administration costs is about $5.3 million. So we're just under 5% as far as our administrative costs in the district. And then finally, the district support services. District support services includes like technology support. It's the business office, it's human resources, payroll, those types of functions, our census office. So the things that support basically the operations portion of the district. So we're going to move on and talk a little bit about the property tax levy for this next year. We'll talk about the determination of the levy, compare it to the current year levy, and then reasons for changes, and then the impact on our taxpayers. So a little bit of background. Every owner of taxable property pays property taxes to the varying tax authorities, whether it be school districts, counties, townships. There are several jurisdictions, or there may be, in which the property is located. So each one of us, each jurisdiction sets its own tax levy. In most part, there's limits on state law. So that levy is set, and then the county sends the bills. The county collects the taxes from the property owners, and the county distributes those funds back to each of the local governments. So here's a sample of a parcel-specific notice. These notices are sent out by each of the counties in Minnesota. They're sent out between November 11th and November 24th with information on the impact of the proposed tax levy. So again, all of them are noted as the ones that you received here in Ramsey County, that it always states proposed taxes. This is not a bill, do not pay. So it does break each of the local governments out. It breaks out the tax dollars, comparing it to last year versus the current year rather, versus the proposed. There's information on that tax statement about the time and places of all the public hearings. And also each statement or each proposed statement breaks out what's voter approved and what is other, or the set by state formula. Looking a little bit more, focusing in on the school tax portion. Each school district may levy taxes in over 40 different categories. Again, the majority of these are set by state formula. We go through the document to calculate that. Is about 40 pages long and thousands of columns of numbers. But again, that levy either has to be authorized by state law or approved by our voters. And the Department of Education, MDE, calculates the levy maximums based on our enrollment and based on those authorized formulas. School district property taxes, we'll talk about that as far as how those are summarizing those, and then how there are many different factors that can also increase the specific parcel property tax. The school property tax process, I've talked a little bit about that. but overall, city or county assessor actually determines the property or the estimated market value for each of the properties within the school district or within the county. Legislature, as I've mentioned, they set the formulas for tax capacity. For instance, how much each property will generate in tax value. The county auditor calculates the tax capacity for each parcel in the county, as well as the total tax capacity for each of our school districts. As mentioned earlier, the legislature sets formulas which determine school district levy limits. So these are maximum amounts that school districts can levy in every one of the authorized categories. MDE also calculates detailed levy limits for each school district based on the formulas. And these limits tell districts exact amounts in each category that can be levied. And then the school board adopts a proposed levy. Our board did that, I believe, on September 22nd. The proposed levy, and now they're preparing to authorize that final levy this evening. Whatever the board adopts in September cannot be increased at the final hearing or at the final adoption. It can only be, they can only adopt the proposed levy amount or decrease what was proposed in September. And we submit that to the state, to the county and the state. We submit that authorized levy to them, and then the county auditor determines the final levy, and that's what comes out on the final tax statements that are issued in March. So again, I touched on this a little bit. September 8th, we received the first draft of the levy limit reporting based on enrollment information that we submitted during the summer. The board, it did act on the preliminary levy on September 22nd. All of our taxpayers should have received their proposed property tax statements in mid-November. Here we are this evening on December 15th at our public hearing, and the board will adopt the final certify the final levy at the regular business meeting following this hearing. Our proposed property tax levy for calendar year 2021 is an increase over the current year of $1,168,000 or 2.9%. We'll talk about what drove some of those changes. Here's an overall summary. The general fund, again, went up, and I'll get into some of the specifics. About $300,000. Our community ed fund, our community service fund went up about $50,000. The biggest increase that we saw here was in the debt service. So overall, we're looking at that increase of about 2.9%. So what drives those changes? Well, in the general fund, one of the big reasons here is long-term facility maintenance, the LTFM, and then an instructional lease. Back in 2017, when our voters did approve the $144 million bond project, at the same time, the board had adopted and continues to take action on an investment of approximately $12 million in long-term facility maintenance needs throughout the district. One of the things that we found in doing further exploration, when we looked at the Fairview Community Center, we had found that it would be more expensive and a poor investment to improve that facility and to invest additional construction dollars or LTFM dollars into that facility. It would be more beneficial, and we would extend the life of the building if we were to construct a new facility. So we worked on this to develop a plan. Again, I had mentioned the LTFM projects of about $12 million a year. Beginning this next year, we did invest some of the construction dollars in looking at a new or building a new Fairview, or a facility to replace Fairview rather. To cover some of the shortfall in funding, we actually are going to be leasing. We entered into a lease agreement, or will be entering into a lease agreement. And in exchange for that increase of $1.6 million in lease costs to finance the balance of that project, we are decreasing the LTFM levy so that it doesn't have a negative impact on our taxpayers. So again, this allows us to finance the new community center or education center, but we are reducing the LTFM levy to offset that increased cost. Another change are we see changes every year as far as our general fund prior year adjustments. Again, this is something, our initial levies are based on estimates of enrollment, values, expenditures. We're always making these estimates a year or two before we actually get into that fiscal year, that tax year. So we typically see some type of reconciling adjustments every year. And in this case, the net change is about $643,000. When we see a positive adjustment, it means that the adjustments were larger than the taxes that had actually been paid in for taxes payable in the current year or earlier years. Our debt service fund, we are seeing an increase here of about $973,000. Again, this is, annual required payment on bonds. So we did plan the increase to maintain a level tax rate and minimize our interest costs. This is something, as far as our debt service fund, we are required to levy 105% of what our actual interest and principal payments are. And that's just in the event that if there are taxes abated or delinquent taxes, just to make sure that we can cover our costs. And then we adjust that downward as we go forward. So that money doesn't stay in that fund. That money goes back as an adjustment in our tax levy in future years. And again, it's stated here as far as our debt service, the 105%, and then we adjust that. So you'll see in debt service, we have a reduction of about $280,000 because of that overage or that debt excess that we had collected. So factors impacting individual taxpayers. Many factors can cause a tax bill for an individual property to increase or decrease from year to year, regardless of or outside of the impact of tax levies. Changes in the property, in the value of the individual property, changes in total value of all property in the district, and then also increases or decreases in levy amounts caused by changes in state funding formulas, local costs, and then voter approved referendums and other factors. So I want to take a look, just a quick look at our 4-year school levy comparison. So I've got some slides here that shows kind of an average as far as what we've seen in growth on some of our sample properties. So actual changes in value may be more or less than these sample properties, but it overall provides a fair representation of what we've seen. So over the last 4 years, we have seen about a 14.7% increase in our property values. I will note that on our commercial and industrial properties, the examples that we used are for the property in the city of Roseville. School taxes in other parts of the district maybe slightly or higher on commercial and industrial property. We do serve different cities and townships, so it can vary a little bit. And so we've just used the best data that we can. I have used Ellers, who is our financial advisor, and we've used their tax calculator and looking at this. So again, this represents from taxes in 2018 through taxes that are being proposed through 2021. Over the 4-year period, this shows the increase in value from year to year. And I'm not going to go through each one of these, but looking at the value on a $175,000 home, the estimated taxes payable in 2021 is $774. When you look at the changes from 2018 to 2021, it's actually been a decrease of $5. So, and then looking at the current year to next year, it's an increase of about $1. So again, this is taking into consideration the overall average of growth in the properties or in the property values using 14.7%. So each parcel will vary. This looks a little bit closer at the $175,000 property or the $250,000 property, and you can see what's happened over the last 4 years. So at the $250,000 property, that tax was the school tax was $1,168 in 2018, and then you can see each of the years. And overall, there's a decrease now this year from 4 years ago. So our taxes have remained, the school property tax has remained fairly flat over the last 4 years. Again, here's just a couple examples of other properties. Obviously, because the tax calculation is done differently, it has a different impact as far as our commercial and industrial properties. There are some property or some tax relief programs that are available to local property tax payers. The Minnesota has a circuit breaker refund, a credit refund. There are some criteria that have to be met in order to qualify for this. It's available each year to owners of homestead property. There's an income guidelines. There's a sliding scale, so the refund would be adjusted based on income and total property taxes. Maximum refund under this program is $2,820, and it's also available to renters. So in order to inquire on this program or to apply, you just need to complete Minnesota Department of Revenue Form M1. There's also Minnesota Special Property Tax refunds. It's available to homeowners that incur a gross tax increase of at least 12% and $100 over the previous year. A lot of times, this is helpful in the first year after a referendum is passed. If property tax owners have seen a significant increase, and there's a formula, the refund is 60% of the amount by which tax increase exceeds the greater of 12% or $100. And again, the maximum on this one is up to $1,000. But there are no income limits, and again, it's that same form. And then lastly, there is a senior citizen property tax deferral. So this applies to individuals age 65 or older. There are some income restrictions. Also residency as far as living in the home. And these taxes are actually deferred. They're not forgiven. So deferred property taxes plus accrued interest must then be paid when the home is sold or the homeowner dies. Next steps, as I mentioned earlier, the board will accept public comments on the proposed levy. I'll find out if anyone has submitted. So we'll do that. And then at the business meeting, the board will certify the 2021 property tax levy. And that's all I have, and I will ask Michelle if we have any public comments.
We did not receive any questions or comments.
Great. Then I think, Sherry, that concludes the presentation that you gave us tonight. Again, another excellent job. Thank you and your staff and team and all involved in pulling this together. I know this is not something that's a simple thing to do. Dr. Sokolow, anything you wanted to add to Sherry's presentation this evening?
I don't have anything to add.
Great. Then I think we had posted that we would start the regular meeting at 6:45 to give enough time. So, and I know that we are going to stop this YouTube recording and restart it so that there's separate recordings. I think that the live feed will continue. But let's go ahead and give ourselves those 3 or 4 minutes to 6:45, and we'll reconvene promptly at 6:45 p.m.